In the dusty, fast-moving towns and the crowded, traffic-choked cities of South Africa, a quiet financial revolution has been taking place. For a very long time, banking in South Africa was seen as something for the wealthy. The big, old banks with their marble floors, high fees, and complicated paperwork felt like exclusive clubs. Millions of ordinary people did not trust these banks or felt they could not afford them. They kept their money in cash, hidden under mattresses or in tin boxes at home. This was risky because theft was common, and without a bank account, it was almost impossible to get a loan to start a small business or buy a new fridge. Then, in the early 2001, a new bank appeared with a strange name, Capitec. At first, nobody took it seriously. It was small and unknown. But over the next 20 years, this bank would grow faster than almost any other bank in the world, completely changing the way millions of regular people manage their money. Capitec understood one simple truth that the big banks had forgotten. The truth was that the average working person did not want complicated products or hidden costs. They wanted a simple, honest, and easy to understand bank account. They wanted to know exactly how much money they had and exactly how much the bank would charge them each month. Capitec took this idea and built an entire business around it. They introduced a bank account called the Global One account. This one single account did everything. It was a savings account, a checking account for your daily spending, and a credit account for when you needed to borrow money, all wrapped into one simple package. The fees were incredibly low. For a small monthly fee of roughly 50 to 70 South African rand, a customer could make as many transactions as they wanted at Capitec's own cash machines. This was a huge deal. Before Capitec, many people were paying over 100 rand per month just in basic fees. Capitec came along and said, "We will charge you less than half of that." And that message spread like fire across the country. The money that people saved on bank fees might seem small, but to a worker earning a modest salary, that extra 50 or 60 rand per month meant they could buy an extra loaf of bread, more milk for their children, or save a little bit for an emergency. Capitec understood the value of every single coin. They also made their branches look and feel different. There were no long queues for separate counters. You did not have to stand in one line to deposit money and another line to ask a question. Instead, you walked into a bright, simple branch, took a single ticket, and one person helped you with everything. That person was not a salesperson trying to sell you expensive insurance. They were a problem solver. Their job was to open your account as fast as possible and let you go on with your day. Then came the real game changer, technology. While Capitec kept its physical branches friendly and efficient, the bank made a huge bet on becoming digital friendly. They realized that smartphones were becoming cheaper and that even people in rural villages were using mobile internet. So they built a banking app that was, and still is, incredibly simple. You do not need to be a computer expert to use the Capitec app. The app shows your balance in huge, clear numbers. To send money to a friend, you do not need a long, confusing account number. You can use their cell phone number or their name. The app also lets you buy prepaid electricity, airtime for your phone, and even data bundles. This means you do not have to walk to a separate shop or stand in another long queue. You just tap your phone screen and the money moves. By the year 2020, Capitec had more than 15 million customers. That is more than 1 out of every 4 adults in South Africa. The bank's total value on the stock market grew to over 200 billion rand. How did they make money if their fees were so low? They made money by lending small amounts of money to many people. Capitec became the king of personal loans. Before Capitec, if a working person needed a loan to fix their car or pay for a school uniform, they often went to loan sharks. These loan sharks would charge crazy interest rates, sometimes as high as 30 or 40% per month. If you borrowed 1,000 rand, you might end up paying back 2,000 rand in just a few months. Capitec stepped in and said, "We will give you a simple loan at a clear interest rate." They used technology to check your credit history quickly. If you had a steady job and a good record of paying back small amounts, they would lend you money on the spot. The interest rate was higher than a mortgage on a house but much lower than a loan shark. This was fair and transparent. For the bank, lending out 10,000 rand to a customer at an interest rate of roughly 20% per year meant they could earn 2,000 rand in interest over 12 months. Now multiply that by millions of customers. That is how Capitec made billions. But they also protected themselves. They would not lend you a huge amount of money if you had a low salary. They kept the loans small and manageable so that people could pay them back without going into a debt spiral. And if a customer was struggling, the bank would work with them to change the payment dates. This built deep trust. Capitec also changed how people think about savings. The Global One account lets you create up to 5 different savings goals inside the same account. For example, you can have a goal for a holiday, a goal for a new television, and a goal for emergencies. The app shows you a little progress bar for each goal. This is a powerful psychological trick. When you see a bar moving closer to 100%, you feel good. You feel motivated to save more. And the money you save in those goals earns interest, meaning the bank pays you a small amount of money just for keeping your money with them. It is a very small percentage, usually around 2 to 4% per year, but it is much better than keeping cash in a drawer where it earns nothing and can be stolen. The bank's growth was not always smooth. In the beginning, the big banks laughed at Capitec. They called it a bank for poor people. But Capitec did not get angry. They simply worked harder. They opened branches in shopping malls and small town main streets. They hired young, energetic staff who spoke the local languages. They made sure that every branch had comfortable chairs and clean bathrooms. Small details like this made people feel respected. When you feel respected, you trust the bank with your money. And that trust turned into deposits. Today, Capitec holds over 150 billion rand in customer deposits. That means ordinary South Africans have chosen to trust Capitec with their hard-earned cash rather than hiding it at home. In recent years, Capitec has even started offering a credit card and a simple life insurance product. The credit card has no annual fee if you use it for everyday shopping. The life insurance can be bought in 5 minutes on the app with no medical checkup. This shows how the bank is slowly moving from being just a bank for low-income workers to a bank for everyone, including richer people who like convenience. But Capitec has not forgotten its roots. They still charge low fees. They still make the app easy enough for a grandparent to use. And they still believe that banking should be simple and human. So what is the final lesson from Capitec's story? The lesson is that money is not just about numbers on a screen. Money is about peace of mind. It is about knowing that you can pay for an emergency. It is about being able to send your child to school without worrying about bank fees eating up your salary. Capitec succeeded because it treated ordinary people as intelligent human beings who want simple tools, not complicated financial products. It married the warmth of a friendly local bank branch with the speed of a smartphone app. And in doing so, it proved that a bank can make a lot of money while also helping millions of people escape the trap of cash under the mattress. From a tiny startup in the town of Stellenbosch to a giant with over 200 billion rand in market value, Capitec showed the world that fast-growing, digital-friendly banking is not just for rich countries. It is for everyone who wants a fair chance to save, spend, and borrow with dignity. And that is a revolution worth talking about.